what the US markets did then, and the S&P 500 rose to new highs in Wednesday's shortened trading session. Now, of course, this is a truncated week coming in because of Independence Day holiday, and this is after that, you did see investors appearing to shrug off sluggish economic data. When you take a look at the broad market index, you're looking at gains coming in of 0.5% there, and a close above 5,500 levels. Now, when you take a look at NASDAQ, then that saw an uptick of about 0.8%, ending the session above the 18,000 levels, as mega caps tech names like Tesla as well as tech darling Nvidia rallying. Now, both indexes touched fresh all-time highs in the session and closed at records as well. So when I'm taking a look at the Dow Jones Industrial Average, you're looking at gains coming in of about 0.1% thereabout. And when you take a look at the 30 stock index as well, that was weighed down by a nearly 1.7% drop in United Health. Now, trading volume, when you look at it, was largely muted on account of that holiday, like I mentioned. Of course, it was a shorter day coming in on Wednesday as well, and the exchange will be shut on Thursday for Independence Day. Now, investors are also parsing through stats that were released on Wednesday morning, showing softening in the economy ahead of Friday's all-important June jobs report as well. Now, ADP data showed less private payroll growth than expected in June, while weekly jobless claims numbers came in higher than economists forecast as well. And with that, you also have, coupled with that, a reading of service sector activity released later in the morning that was considerably weaker than expected, and also indicated a contraction coming in according to the Institute for Supply Management. So now these reports could concern investors about the state of the economy, but stocks found support from a decline in bond yields at this point, as traders grew increasingly hopeful that the Federal Reserve has seen sufficient evidence of economic tightening to begin cutting interest rates as well. So that largely is the handover coming in from US. When you take a look at the European markets also, what you saw is that European stocks also closed higher. So that largely is the roundup coming in there, Sneha.
Absolutely, and equities doing well globally is very clearly having an impact on our Nifty implied open as well, because as of now we're penciled to open up with a strong gap up opening of 175 points on a spot basis. Yesterday also we were penciled in to open up higher, which we did, and the Nifty closed 0.7% higher. Similar rally expected today. But let's move on, talk about what oil prices are doing, and oil prices fell in early trade yesterday after this morning after US employment and business activity data came in weaker than expected, in signs that the economy may be cooling in the world's top oil consuming nations. Now, in the United States, data yesterday showed first time applications for US unemployment benefits increased last week, while the number of people on jobless rolls rose further to a 2.5-year high towards the end of June. Separately, the ADP employment report showed private payrolls increased by 150,000 jobs in June. We'll be telling you more about this. In a further sign of a loss of momentum in the economy, the ISM non-manufacturing index, which is a measure of the US services sector activity, fell to a 4-year low. And later in the show, we'll be giving you more details on this as well. Now, however, weaker economic data may add to the Fed Reserve's arguments to start cutting rates. Analysts said a move that would be supportive for the oil markets, as lower rates could boost oil demand. On the back of all of this data that we saw coming yesterday, let's take a look at what both of these indices are doing. Brent at $86.96 a barrel, almost at 87, 0.5% lower is where that index is right now. And you have WTI oil as well at 83.4, so almost 84, but has slipped below that $85 per barrel level and trading with 0.5% cuts as well. Moving on, let's also take a look at what gold prices are up to, and gold prices have risen more than 1% to a near 2-week high yesterday, driven by increased bets for a September interest rate cut by the Fed Reserve after we've seen all of this data coming in from the US markets.
If you like this video, then like, share and subscribe to ET Now.